Good morning, everybody. Hey, welcome to Thursday, June 25th. Yesterday was quite the rout, as Dave and I will discuss here in just a few moments. Not a very pretty day at all, and today is shaping up to be kind of the same. So, as Dave and I have prepared to talk today, some things on the board. GDP comes out, unemployment claims come out. So, some economic news that could very well drive the markets today. Hang tight, and we will be with you next step.
That is Maroon 5. I'm Morning Dave. It's time to check in on our money. It's 8:40, and I think it's a plot. Earlier this week, Phillip, Statler, and I were able to pretty much pass the time of day, and now all of a sudden we got a data dump from heck coming out of the federal government, and a few companies reporting as well. Let's head right downtown to the offices of Statler Financial Services, where Phillip's standing by and has a very deep breath taken because, boy, we got a load to talk about, don't we, Phillip?
We do, on both sides of the fence, right? On the macro side and on the earnings front. It seems like the last little push of earnings before the end of the quarter.
Absolutely. On the macro side, the government did a data dump for us this morning, both the usual stuff and a once-a-month update that we were all waiting for. First of all, first-time unemployment claims, 1.48 million claims for new unemployment as of last week. It's a miss, but not a monster miss, right?
Exactly. So the initial claims were expected, depending on who you look at, but my folks, 1.3 million. And so that is still a miss, right? We added over 100,000 more first-time unemployment claims. And we are really, let's see, this is the first or second week. Well, last week would have been the first week for the first payroll protection program to be done.
Mm-hmm. And we were a little bit nervous about that, resulting in a bump on unemployment claims. So far, my number was 1.38, so yeah, we're both agreeing it's kind of a little miss, but our nightmare scenario was a boatload of them, and so far, at the very least, we aren't seeing that, so I'm counting that as a win.
Yeah, for right now, that's for sure, and the futures liked it too, that and the fact that we had durable goods come out, and it was a little better than expected.
Now, that was the other good bit of news that came out of this. Durable goods orders up 15.8% in May. That was a beat. The thing that I found kind of interesting is once you pulled transportation issues out, things like, cars, tanks, I guess, too, the gain was only 4%. Number one, it was a gain. Number two, that's kind of good news for the automotive industry, I've got to assume, if you take transportation out and the number doesn't look quite as good.
Well, that's true, and we've seen that the automotive industry has done a good job the last, during this whole quarter of really pushing with incentives to move cars.
Understood. The other report, and we're not dismissing the importance of all of this stuff, but we got so much to talk about. Gross domestic product for the first quarter. They kind of confirmed it. This is our final reading on it. We officially fell on gross domestic product by 5% in the first quarter. That's kind of really El Stinko, but the fact that they didn't revise it downward is good news, and I guess good news. That's what the market expected, right?
It is. They expected it to remain the same, -5. And so, the question really is what is the second quarter going to look like? Because you and I both agree that really the coronavirus didn't start hitting us until, probably mid-February, 1st of March before we started seeing the pain. And so that means only part of the quarter was affected. And now we have really a whole quarter in the second quarter where it's been a big impact.
Yeah, we're kind of expecting Armageddon level numbers when they start talking about the second quarter and we get into the middle of July and see the first read on that, so nobody's looking forward to that. Yesterday was a down day on Wall Street. Mostly, they say, racked up to concerns about the sudden bump upward on coronavirus cases. And that's kind of backed up by what I'm seeing on the futures. Virtually every big loser I've got in pre-market trading is a cruise line, an airline, or somebody relating to travel and hospitality. Folks just are selling those like chiclets this morning after worries about needing for more shutdowns and more travel restrictions. The thing that I found amusing in the process, what happens? What are they buying in a down day? Hertz up like 45%, and they're in bankruptcy. Why aren't those turkeys on the green sheets anyway?
Yeah, I don't know, man. That doesn't make any sense to you or me both. And it's just somebody's playing Russian roulette out there, right? Trying to make a killing. And the last guy holding's going to lose everything.
Oh, Lordy. Yeah. I mean, you look at these travel stocks like Carnival Cruise Lines, Norwegian Cruise Lines. Yeah, they're in crappy times right now because they can't leave. But at the very least, you can be reasonably certain they're going to be okay in a few months. Hertz? Who the heck knows?
Exactly. That's so true. So true.
Talk about some companies that actually did put out some hard numbers this morning, Phillip.
So we've got several, a lot of them actually, considering what we've had the rest of this week, nothing. So Accenture, which is a big consulting firm, they beat by 5 cents a share. Revenue was above forecast. Now their sales, their revenue was down 1% from where it was a year ago, but they've been able to boost their digital and their cloud service. Has been a big benefit for them. So they're trading actually up 5.5% this morning. So they're getting really close to their 52-week high.
Cool.
We do have a common name here. Darden Restaurant, the parent company of Olive Garden, and the host of other restaurants also. They lost $1.24 a share. Now that sounds bad, but they were expected to lose about 40 cents more than that. So I guess that was a good thing for them. Revenue was basically in line. Same restaurant sales were down 47%, which was what was expected. And they've come out and said that for the current quarter, restaurant sales are down 33%, and they've got 91% of the restaurants open, their dining rooms open. So they're trading up about 1.25% right now.
Did they say anything about takeout and delivery helping their business as as why they had a bit of a surprise, or is it just not as bad as people expected in general?
I think probably just not as bad as people expected in general. I mean, because the same restaurant sales numbers came in pretty much in line with what expectations were. They just managed to do a little better on the expense side, probably.
Okay, I was curious because they're one of those business models that doesn't lend itself to takeout as well as some of the others as well.
You're right. They do. So the other one I have is relation to our industry, the financial industry, FactSet, which we get a lot of our numbers from. They're the provider of financial market information to guys like me. And so they came out and beat substantially by almost 40 cents a share. Revenue was a little shy of what was forecasted. They had a really strong quarter despite the challenges that we've all faced with what's happening out there. And so they're trading up today 2.6%.
Cool.
The other one
I do find irony in FactSet, the people that put out expectations getting their own expectations that far off.
Well, now they survey analysts, right? They don't come up with the number. They survey analysts. Let's make sure we get that right there.
Just found it kind of ironic that the projection company got its own projections off.
Yeah. So we got McCormick, the spice maker. They really had a good quarter. I mean, they beat by 31 cents a share, came in at $1.47. Revenue came in ahead of forecast. Obviously with people staying home, what do? You cook more. And if you cook more, you got to use more spices. And so they're up about 0.5% this morning. I've been one of those folks that's been helping them out a little bit with my new grill, trying to make my own rubs and stuff like that. So been a little interesting there. Hey, the last one I have is KB Homes. We had another construction company last week, I believe. KB Homes, they beat by 6 cents a share. Came in at they made 55 cents a share. Good for them. They missed on revenue. Sales were down 11% for the quarter. And here's some numbers that I think are important. Deliveries fell by 10%, and net orders plunged by 57%. So the coronavirus is having an impact on KB Homes. They are trading down almost 16% this morning.
Ooh, yeah, the net orders are the thing that scares me the most because that indicates the future.
Exactly. Yeah. So they don't have a lot of stuff sitting on their books to start working on.
Yeah, that doesn't augur well. Resetting the table for the morning. Off day yesterday, mostly, again, coronavirus jitters. Not a lot of other news that's causing it. 45 minutes before we open up this morning, Phillip, I'm looking at red ink, but you were saying earlier it's improving a bit. Where are we 45 minutes early?
Well, when I said that, it was improving, Dave, but now it's gone back the other direction to closer to where it was when you and I first started speaking this morning. So we are blanketed red across the board today. We're starting with the Dow down about 9/10. The S&P 500 down about 7/10. NASDAQ's faring about the best. It's down less than 2/10. So everything there is going to open up to the red. And it's kind of the same on the other side of the board when it comes to commodities. Silver is basically even right now, up less than 0.1%. Gold is down 0.25%. Crude oil is sliding significantly, down 2% to $37.20 a barrel.
Do we have? I was trying to remember. I was reacting. Do we have a crude inventory report yesterday that might have pushed that down, or is this just demand expectations?
I think it's demand expectations. I mean, I think there was a crude. It never actually shows up on my board. They don't have an estimate. It says 1.4. I don't know what that measurement is measured against. So I didn't see the report anywhere.
Find a tip sheet that follows that because I got the same problems as well. I'm just looking at it and saying it's going the wrong direction for economic benefits. Overseas markets, they were off on the Asian rim markets, not heavily, but off overnight last night. Europe, strangely, is mixed. Great Britain is just about flat with a little red tinge. Germany's trading up midway through their day today. Phillip, it's a time in which a person's retirement starts really weighing heavily. If you're within 10 years of retiring, looking at what you and I talk about every morning has got to be scary. How do I get a hold of you in order to manage the risk in my retirement portfolio?
They can give us a call at 863-382-0037 to schedule their no obligation financial x-ray where we can measure how much risk they have in their current portfolio. You know, whether we do it via phone, via Zoom meeting, virtual meeting, or whether you come into the office, we make ourselves available. Then you can catch us on Facebook. Just search under Statler Financial Services. You'll find us there. Like our page. We repost this every day. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on Highlands News Talk 730.
You are absolutely everywhere, sir.
Hey, we try to provide a lot of information and keep people educated. And hey, have a great day, and I'll talk to you tomorrow.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. I want to thank you for joining us today. I hope that your day is off to a great start. I look forward to speaking to you again tomorrow. Until then, have a great day.